Get started. All right, you can take back the
Okay.
screen.
Yep. Let me grab this screen here, share my screen. And I think that yesterday's question it had to do with uh, looking at the options volume, tracking the options volume um, throughout the day or historically. So I'm just going to come back to this options chain. We talked about these two graphs comparing side by side the underlying stock activity versus the options activity, which will kind of just allows you to eyeball and just spot if there's anything unusual during the day that happened in either both or one, or the other. Let's go over here under the options chain. And, we could go and look at it at more granular levels. Uh, And when we talk about options, and while I'm on the options chain, I'm going to close this left-hand side just to expand the screen. When we talk about options volume, the difference is that between options volume, analyzing options volume and stock volume is that with options volume, there are different contracts that that could trade that are in different expirations or different strikes, or it could be a call or it could be a put, and they're not all the same, right? A option in September 20th is not the same thing as an option on October 18th because they're different expirations, and because they're different expirations, there are some different risks with time value, Vega risk, and there could be events that cover one expiration, not the other. So not all these options are the same. Even when we aggregate the total options volume, we could look at, well, what was the options volume in Tesla? 932,915. That's not the same thing as volume in the stock, 51 million. So because the stock is for Tesla it's the same. It's fungible. You could exchange the same stock um, person to person. So um, when we look at the options volume, then we'd have to go and break down, well, where's that volume concentrated, um, and so forth. And there are a couple different ways we could do that. And the total volume, if we just kind of wanted to start digging down layers, could click on this on the volume. And over here, we have a breakdown of the volume. And in the left-hand side, we could look at it from different perspectives. So this original um, graph here, this shows us 5-minute volume bars in Tesla. And the bars also are stacked with yellow representing call volume. So you can see your call volume, blue representing put volume in that 5-minute interval. And it's stacked so you could see if there's any particular spike in total volume that 5 minutes. And then the blue and yellow allow you to just eyeball and see if was was it was mostly puts, calls, does it look like pretty even? Um, and now you could just eyeball it. And sometimes, here it doesn't seem anything particularly unusual in Tesla, because if you look at this, from day to day, usually the mornings bring in the most volume because you'll have an accumulation of orders, in the morning, and people reacting to the news cycle from overnight and and the news cycle prior to the open. People were rehedging or establishing positions. So you'll see that the volume in the morning typically tends to be higher than falls off as the afternoon uh, comes along, because then things are a little bit more quiet. You know, typically you don't have big announcements during the day, to shock the markets. You usually see uh, companies releasing uh, like something like earnings or events, prior to the open or after the market closed. But sometimes you could see events happening even in the middle of the day. Sometimes you get economic news, so you might see a spike, a Fed announcement. Sometimes you may see a stock that is attending a conference or waiting on some kind of approval, and you might see something in the middle of the day too. But from day to day, it'll usually look more like more volume in the morning. It slows down uh, during the afternoon, and then sometimes you'll see the volume picking up at the end of the day, and that's because uh, people, will rehedge positions, rebalance their positions. If it's their last chance, if they want a position or some risk exposure before the market closes, so you'll see the volume increase at the end of the day. But this is the point of this chart, just to eyeball, and if there was something unusual in a particular time of day, you could go back then and look at our time in sales and see what would happen. If there was a big spike over here, like around 12 or 1, well, that could point you to maybe something happened, and then you could go and research that particular time period. Whereas their news, where was maybe somebody recommended stock, maybe something happened on social media, or something related in the market, and then you could just analyze that in isolation. Maybe just somebody put on a big trade, you could analyze that big trade. So this volume chart, that's what it would try to point out. And you could also just look at, if you're trying to look at an aggregated for the last 30 days, if I click on that, now you could just see the aggregated volume for an entire day going back last 30 days. So here, September 6th stands out a little bit just because it's the highest volume bar. You could see, especially like what we see is maybe like this September 4th, 5th, and 6th, kind of trending up, and then it came back down. Maybe something happened around those dates. And if you do research or you're interested, you could go back and take a look at, what happened on those particular dates, or, what the trading was like, what it may have been reacting to. And then last 12 months kind of gives us a picture of aggregated volume by calendar month. And here it just shows that, July in particular appears to be the highest traded volume month. Maybe something happened in July. So that's another way to kind of go back and start, digging further down the layers. What do they say? Peeling the onion. All right. So let's come back to the most recent activity. So we're closed. This was as of yesterday's close for that day. But when we talked about the options, we talked about their different, characteristics, like expiration, strike, and so forth. What if we wanted to see if there's a particular expiration or expirations that the volume was concentrated? So where do we start? Where do we start analyzing or looking? Well, one is we could isolate it to a particular expiration. There's 932,000 contracts. So let's click on this and look at a distribution of volume by expiration. So click on that. And now you could see down here, these are the different options expirations available. September 20th, September 27th, October 4th. And visually, it just, it indicates that most of that volume appears to be on the September 20th expiration, the very nearest term expiration. We could kind of slide down, and we could confirm this because these are the different expirations available, and you could see here 653,000, and you could look at the numbers here, but the graph just points it out much quicker. And the next expiration looks like September 27th expiration had some volume, but a lot less, significantly less based on these volume bars. So now we kind of see that people are using options in Tesla on the very short end of the maturity. Right? That's how people have been trading it yesterday, and it looks like that's how the end users are utilizing the Tesla options. So you have all these other expirations available, but very little trading relative to September 20th, right? Relative to September 20th, all the other volume bars look very small. Some are barely noticeable because this is a relative chart. And the breakdown is that of all of it is 42% of them were puts, 58% of the options were calls. So now that we have that, what about particular strikes? We do have different expirations, but we also have lots of strikes, and the strikes make a difference, could make a difference too, because you have strikes that are at the money. So those are strikes that are very close to where the stock price is currently trading, the spot price. But we also have strikes that could be very far out of the money. They could be calls that are 10, 20, 30, 40% away from the current spot price, which would indicate that people are concentrating on wings or tails or very strikes that are very far away. And the same thing in the puts. The puts could be near the money, right? Near the money, like over here, 226. But there could also be any other strikes available, where they could be 10, 20, 30, 40% away. Who knows? So are there any particular strikes that people are concentrating? Is it equally distributed? Or is there a concentration? Is there a skew to how these options are being traded? So if we just look at all the options irrelevant of the expiration, if we just look at all the options that are traded and then graph them by the strike, what does that look like? So that's when we click on the strike by strike. Okay, now what we see is that this bar here, the 230, had the most option volume traded. And you could see here 87,845 of those involve call contracts, 23,740 put contracts. So what it appears is that, a lot of the volume, just looking at these bars alone, were concentrated between the 225 strike to the 230 strike. So these three strikes are close to where the spot price is. Okay, so those, if we took those three, we could see that a lot of the trading involved options that were close to the money. But we'd also see some bars that are a little bit further away. Here's one that's 220, right? So it's not very far away. Like 220 is not that, not a great, distance away from 226. I mean, we're talking about a, $227 stock. But on that strike, what's noticeable is that it's mostly puts, right? 71,000 contracts were puts, 9,800 were calls. So there's a decent amount, significant amount of puts that were trading on that strike. And that could be important or interesting information for somebody that's interested in trading puts in Tesla and looking for where there might be liquidity or trading or what people are doing. Because if you're looking for puts in particular, and you're looking for liquidity and price discovery, and this could indicate, hey, there's lots of trading going on here. I could take a look, see if I wanted to, participate in those particular options. And now a couple more bars that kind of stick out is that from the 235, 250, so they kind of skip 230, let's say, well, 235, 240. If we just look at those strikes, we see those two bars, there's some call activity there that might be interesting. Then there's another bar here at 250. So those are the upside strikes. And we see that for the most part, the trading seems concentrated closer to the at the monies, the 226. They do spread out, between the 220, we would say, and 250 strike. Right. So not too far away. And as you go up in strikes, it appears that most of the trading is in the calls, which kind of makes sense. People don't typically trade in the money options that much. And as you go down in strikes, you see volume mostly in the puts. And around the at the money, it seems to me that, it's probably more calls than puts. And here overall 50%. So that's another way to look at the distribution of volume, and get a sense of which strikes are traders using when they're trading these options. And of course, if we wanted to go more granular, we could look at particular expirations. Now we could go back and say, well, September 20th expiration seemed to be the expiration that had the most volume, September 20th. So here we get two charts. One is the distribution of volume by the strikes. So we could see here which strikes and the calls and puts stacked. So here we see that the 230 strike had the most volume, followed by, I think, the 225. So now in the September 20th, just visually, we see where the volume is trading, right? This is the distribution of volume by strikes in this particular expiration. 56% of all the options were calls, 44% puts. And this is how that volume is distributed. And right below that, we also display the volume bars in the 5-minute intervals. And this just allows us to see, well, based on, here's the volume traded. Was there any particular period throughout the day that sticks out? Was there maybe, if I went and looked at the time in sales, where would I start looking? Is it like in the middle of the day, at the end of the day, in the beginning of the day? And here it shows that a lot of this volume started at the start of day and then just kind of tapered off. All right. So I'm going to stop right there, Will, but this is kind of a graphical visual view of the breakdown of the volume, looking at it from different angles.
Yeah, that's awesome. Actually, Rob made it suggest you can even break it down into just the options that are trading just the near term, the daily expirations to see what's going on there too and get the same type of reports, which he loves doing, he said. So that's cool.
Yep.
Awesome job, D. Before we go, can I share my screen real quick?
Yep.
Rob hosted a large bike event. Well, he's part of a group that does a large bike event in Chicago. Rob is one of our big regulars, always asks great questions. And he shared a picture. There was a rider who rode for the entire 100 miles
Yeah.
with his pet dog. And it
Oh
actually
my God.
is just a little, well, I'll let everyone see it. Can everyone see that?
Yeah. Wow.
Yeah. So that's not that much bigger than your dog, right?
No, that is bigger than my dog. My dog is
Oh, it
like
is.
she's 8 pounds. This one looks a little bit bigger, I think.
Yeah.
Maybe yeah, I don't know if she would probably sink right into there. But that's a cute picture
Yeah, Mike,
with
the
the
mayor,
comment.
was saying that God, the guy's back must have been hurt, and I can only imagine a
Oh
hundred
yeah.
miles he did with
Oh
that
my
dog.
God. Yeah.
Well, awesome job, D, as always. Rob, thanks for sharing the picture. We
Yep.
always love everyone's stories, what they're doing besides trading. Always cool. Great job, D, as always. We'll see you tomorrow. Hopefully everyone can
Yep.
stop by tomorrow. Thanks.
Yep. Thanks everyone. Have a great day. Hope you have a great trading day and hope to see you guys tomorrow.